Now let's zoom out a little bit. We can see some of these key levels. You've got the gamma flip quite a bit below, about 60 handles below. The most active put strike, just over 30 handles below. And we'll zoom back in here. We can see some of that resting liquidity being absorbed here. And we see another level of resting liquidity appearing below us as well. So it does seem like there's more interest from market participants in lower prices here. We also see volume in that most active call strike building as well. So it's an interesting dichotomy we're watching here. What's most interesting to me, though, is really this convergence area between this large area of resting liquidity and this hot call. Because I think if we're able to break above VWAP and the point of control, we start to see some of the liquidity below us diminish, we've got a decent chance of moving up there, just on the basis of the momentum we've experienced so far today and where the market seems to want prices on both the basis of resting liquidity and options activity. And the information that you see on the right side here under the options column is updated just about every minute from CBOE data. So this is refreshing as we get it. It's pulled into Bookmap. It's then put into the options column. I'm going to be adding more functionality to this, but for right now, it has both the key levels of positioning ordered by size, like Gamma 1 is the largest Gamma level that's worth watching. Key 1 is the largest level of net exposure on the call side. Gamma 1 is the largest level of collective exposure. And these levels are pretty important to price discovery, as we've seen trading these markets, that especially when there's convergence, like we can see right here with this warm call and this area of resting liquidity above us, that makes that level more magnetic, right? Because you've got interest from call buyers. You've also got interest in limit orders. This resting liquidity is pretty important to watch. And we are starting to build that point of control up higher. That is constructive to see it moving higher. I do want to see price move well beyond that. And we can see liquidity building up above us as well, which is generally pretty constructive. We do still have this insanely large order below us, over 3,000 on the bid at about 49.34. It's worth watching, but it's so large, it almost is more likely to act as support than a magnet. So yeah, I absolutely would use. As someone asked, I know you've mentioned the hot call, but how would you use the warm call versus hot call? So I look at warm call as the area of the second most interest on the bullish side, and actually, the warm call is more active than the hot put. So what we can really see is when we aggregate the options volume today, there's significantly more interest, about 50,000 on volume on the call side for the top two versus 36,000 in volume for the top two puts. So that's telling me this is a market that is imbalanced towards the buy side, which suggests, along with some of these areas of resting liquidity building above us, that there is a more bullish undertone to this market today. It's also Lotto Friday. You've got passive flows from the decay of theta and delta bidding this market up as well, because we're outside of that window of weakness. We're back in that area where dealers are progressively removing hedges as some of these puts lose value over time, and that's liquidity positive. So to contextualize what I'm saying, I think that all of the most active option strikes, and we're really just including 4 right now because I found in my back testing those 4 most active strikes tend to be the most relevant to watch. I find that knowing where the strikes are and how much of an imbalance there is between them is helpful. That's one of the reasons we have that midpoint indicator, so that when it's a market that's more imbalance in terms of options flow, we know where the center of that balance level is, and often price comes back to it. Well, today is not a day where there's that balance. Today is a day where there is much more bullishness on the buy side, and we can see that in the intraday put-call ratio. We can also see that in the distribution of volume on the top 2 most active puts and calls. Just zooming a little bit out just to see if we have any more interesting, like, look at this. You got this 533 resting bid down here around 48.50. That's nothing to be too concerned about, but just interesting to watch. You've got another larger one down here as well, around 47.75. And these are just large institutional players that have their passive limit orders in place. One thing we don't know about these orders is whether they're much larger than what meets the eye. Well, what do I mean by that? Some of those orders may be icebergs, right? So you may show your hand of 500, but you may really have several thousand contracts you're trying to buy or distribute. And so we see that with the iceberg indicator as that transaction happens. You can see if there's more passive accumulation or distribution happening at the same time. And we can see that volume on the most active call building from 26 to 28 now. There's more activity in the puts here, but still the ratio between these two is pretty striking. There's so much more activity on the call side. It still suggests there's this upward bias. And Friday is also, just statistically speaking, have a pretty high probability of resolving higher for the week. It's just age-old statistic. You get some vol compression before the weekend as well. So typically Fridays tend to be decent days. And you've got the backdrop of Meta and Amazon helping to boost spirits today. Now, underneath the surface, there is pretty significant distribution in the S&P, but as long as the leadership remains bid, that's Really all that matters in context of today's price action. You can see price approaching that hot or that warm call now. A little bit more volume coming in. Some of these smaller traders being stopped out. You can see that with the red circle up above, that 231 showing you 231 ES contracts stopped out on that move higher above the point of control. Now we continue to press higher into that warm call here. Again, that upward bias reinforced by growing resting liquidity above us and the flows that we're seeing, that imbalance of flows in options. If we look at this through auction theory, it's the same sort of idea, right? You've got an imbalance. There's more demand than supply. Price needs to go higher. And that's sort of some of what we're seeing in the microstructure here so far. And folks, if you have any questions about anything that I'm talking about, that I'm sharing, or otherwise, let me know. Always happy to help. One of the main purposes that I do what I do is to educate, to help other people, share what I've learned, hopefully help you become better traders, investors over time. That's the whole reason I do what I do. So always happy to address questions and hopefully help to provide some value in how you're seeing what I'm sharing here today. You can see the market kind of hugging that point of control and building off of it again here. Pretty flat on the iceberg side, not a lot of passive accumulation or distribution. But you do see some smaller traders that are more price sensitive getting stopped out on that move higher. Let's look at the NASDAQ real quick. We've got a nice move in the NASDAQ. Comparatively speaking, it's a little bit stronger from that base. Let's see how that goes. The NASDAQ, you don't typically see as much resting liquidity in, so it doesn't play as much of a role here. But it is also a much less liquid contract. I mean, look at this. This thing's barely got 3,000 contract order book depth. That is very illiquid. So we want to be paying close attention to this because the NASDAQ tends to be the momentum leader here. We've got oil continuing to grind lower. And the 10-year note, still seeing some selling pressure in this one. And again, that matters quite a bit because this is a very, very liquid contract. Pretty significant call buying activity in the SMH ETF coming through recently here as well. Targeting that 190 strike. Lots of selling in industrial metals today, really across the board, as well as precious metals. Silver's got no bid. Platinum, palladium rolling over. Copper and gold sagging a bit here. Really across the commodity complex, not a lot of excitement, but the dollar is well bid. That puts a little pressure on commodities in general. And we do see rates moving higher, particularly on the longer end. Now, once again, we could see S&P futures building towards that warm call. We see more liquidity building above us here. You can see this 303 resting offer above coming in pretty recently. This all matters in the context of demand versus supply. Someone asked if S&P can reach 4950 on the cash index today. Let's take a look at a couple things here. That is pretty much where that hot call is, so there's a lot of interest in the market for that level, right? Now let's see if we break that down just a little bit more. Yeah, 4950, most active area of interest on the call side. 4900, most active area of interest on the put side. There are more calls transacting than puts, and there's a lot of exposure up there at that 4950 level. So I would say we're only 10 handles away. We do have resting liquidity building up above us on these offers. So it's a reasonable scenario that we could hit that level, that 4950 SPX. And I think that would pretty much be the upper limit of where this rally could go today. And the way that I would contextualize this is keeping an eye on these levels here. We've got the warm call that we're playing with right now. We've got the key level up here. This is the largest area of net gamma exposure. And then we have the hot call just above, and above that, finally, we've got this large area of resting liquidity. So everything is kind of setting up for that potential outcome, but we can't discount the fact that we do have this large resting bid below us, both at 49.56 and 49.47. So I'd say overall, momentum is and the way that flows are shaping up is on the side of the bulls here. You know, you've got the top two strikes on the call side totaling 56,000, the top two strikes on the put side totaling 40,000. That's still a pretty big difference. And S&P futures not very liquid today either, by the way. So that's kind of a sign that you have to be careful about managing your risk. When order book depth is this low, and it's about 42,000 right now, average is 50, 60,000, usually mid-50s to 60, that means you have more room for wider price movements, right? There's less liquidity. It means there's less volume needed to change price more. So that increases that distribution of tail risk on either sides, which means for me, I would trade with smaller positions and slightly wider stops to account for that. Do see some selling pressure here in the S&P. Let's take a look around other parts of the market real quick. NASDAQ also seeing similar. Oil's moving just a little bit higher, but not much to see there. Rates continuing to move higher, which is not amazing for this market, not something it wants to see. Mostly seeing that on the 10s, but 30s also seeing some distributive pressure here as we saw with TLT. And look at that, the euro's moving lower, which is telling you what? The dollar's moving higher. What do we see in the yen? Kind of a similar look, but the euro is leading the way lower. That's not the most constructive thing to see. It's not what you want to see if you're, bulled up on the market, because a higher dollar and higher rates tends to put some pressure on equities. So that is something we're going to have to keep watching here. There was a little bit of an iceberg sell there recently where some of that distributive pressure happened in the S&P. It was about 191 contracts, not too much. I get more interested when we see that number in the 4 digits. And order book, still more demand on the buy side overall, as we can see on top here. But it's fluctuating. So Carter asks, where is the order of 49.56 you mentioned on the stream? Is that the red, yellow highlighted bar? So yeah, that's right here. And you can see it in the cumulative order book, COB. And you can also see it here. It's thinned out a bit. So earlier it was 299. Now it's about 215. There's some orders stacked above and below it as well. So worth watching, but it's thinning out a bit here as we see liquidity building above. So I'm still leaning a little more bullish on this. I'm just a little concerned about what we're seeing with the euro and rates right now. Now we're getting close to lunch hour here. Typically markets thin out, become less liquid. Sometimes you have some pretty big moves. Sometimes it's just crickets and it's pretty boring. So I'll probably hop off of the stream as we approach lunch, but I'm going to hang out here for at least another 10, 20 minutes. Yeah, you're welcome. Thanks for the question. Just sort of consolidating here, not seeing a whole lot of pressure to the upside, just pinging around the point of control and VWAP level. That point of control is this yellow line. The volume weighted average price for the cash session so far is this white line. Still see a little bit more liquidity building up above here. NASDAQ's building a little bit here as well. Looking a little more constructive than the S&P so far. Oil's plunging now below 72. Probably not the best look there. Getting a little more concerned about being bullish of energy, particularly if we move below 70 on a closing basis. A little bit of a reprieve in rates here. Had some folks get stopped out on this move lower. 102 contracts, not much for something this liquid, but, watching that nevertheless, and we see a little bit of a push higher, meaning rates coming just a bit lower. Euro, though, not catching much of a bid on that. Typically, when rates are moving lower, euro is going to move higher. We're not seeing that here, so the dollar is continuing to strengthen beyond what rates would imply. Right. Got the gold contract up here as well, rotated to the J contract. That's where the liquidity has moved in this one. And it's pretty choppy, but mostly distributive to the downside here in the yellow metal. Buyers trying to make a little push here again. Carter, there's no reason to ever apologize for asking any questions. I welcome questions, and I'm always happy to look at all this stuff and provide my views on it. So Carter asks another technical book map question: how to interpret the red above market profile. So tell me a little bit more about what you're talking about there, Carter. Like you said, you see 200 contracts at 49.65. Why is the color red? And is that what you mean by resting liquidity? Okay, I think I know what you're saying. So basically you're saying, why is it red above spot? Why is it green below spot? Is that kind of the gist of it? Yeah, okay, got it. So everything above spot is a resting offer. Everything below spot is a resting bid. So the bids are green, the offers are red because the bids are buys, the offers are sells. Great question. And I know it's not implicitly obvious looking at this stuff. And this is exactly why I like these questions, because it not only helps you, but it helps other people that are watching as well. Here's that big push. Here's that big push, folks. Right up to key level 1, right? Got pushed past that warm call. We're right up to key level 1 here. No reason we can't continue this move up higher to the hot call. 613 contracts stopped out on that push higher. So now we actually have some real volume building in this. We've got the call volume building on that hot call up to 34K. Got Yeah, this is exactly what we would have expected to see with that sort of imbalance to the buy side in options, the rest of the liquidity building above, fading below. So I think we could get up to that hot call level, perhaps even the 644 resting offer. That's about where I would be taking things down, though, winding down longs. Hopefully this has been helpful, talking about the setup, talking about what we're seeing, why it matters, and how that affects our bias. Because you can come into the market with any opinion you want, but you got to trade off the data, and that's exactly what we're doing. This is also why I built this tool, the SPX Options Visualizer, because it plays such a big role in price discovery in the S&P. And so to see that convergence between where there's resting liquidity, where there's options activity, to me, that matters a lot. It gives me extra confidence. It gives me more data points to rely on to see if I'm still on the right side of the trade. And so it's an edge that we can build into as retail, because we don't have all the tools that institutions have. But we can build tools and use tools that help us gain some degree of visibility that the average trader and investor that's sitting at home doesn't have. And this is exactly one of those. So we see a little bit of just lack of buy-side participation here as we get back to that key gamma level. Let's see if that acts as support. We got a little bit more resting liquidity coming in below us here. And that push that we just saw, there was about 37 S&P contracts bought in that push. That was pretty big. Continuing to see that resting liquidity building above us here. Let's keep an eye on the price action. It still seems overall constructive. Taking a look at the NASDAQ, very similar to the S&P, just exaggerating those same moves, more momentum in this higher beta contract that's much less liquid. Those two things are very much related. Oil, nice bid off that low there. You think the NASDAQ's high beta, check out oil. And then you got rates, a little bit of a reprieve, but then there was actually a pretty big sell. Like this 1500 sell catches my attention. So you had this bid in the ZN contract, I'm sorry. So that's the 10-year note futures non-leveraged, right? We got up to this area and we saw someone dump 1500 into that tape, and that definitely had an impact on price discovery, sending rates a little higher from their recent lows. And then we've got the euro just continuing to just fall off the map here. This is kind of gross. It's not great to see the dollar gaining strength here. Yen, similar look as well. And getting maybe a second push here. Let's see if they can build some volume here. I always like to see some volume on these price pushes, like the one that we just saw around like 1127 or so. That gives me a little more conviction, particularly when you start to see, CVD moving into the positive. You see smaller traders getting stopped out. We might see another push like that. And then if we do, I'd be taking off long positioning into that hot call level. I'm not going to necessarily look for a complete run up to that level of resting liquidity. Hope everyone out there is having a good day so far. If you're struggling in your trading, if you're having any problems or just want to talk about strategy, always feel free to ask us. We're happy to help. One of the things we do at Traderade isn't just talk about what our ideas are or where we think the market's going, but also we try to help our members become better traders, because that's really what it's all about. It's a difficult game. There's a low success rate, and we're trying to help folks beat those odds. So remember, the last time before we had a big directional move, we had this period of sideways consolidation. Seems like a little bit of deja vu moment here. Let's see what this leads to. But typically when you see that sideways chop, it's kind of like a spring that's coiled up and energy is building for a move. We'll just take a look around the other parts of the market. NASDAQ's consolidating just like the S&P here. Tiny bit of iceberg selling there, not too much to register. Oil's continuing to push higher. Typically, if it pushes too much, rates start to get upward pressure. So let's watch that closely here. 10 years consolidating, so not much to see there after that little move down, that iceberg sell. And the euro is starting to see a little bit of demand back in it. So this is quite interesting. We'll be keeping an eye on all of this. Let's just take a quick look at gold. Gold also, nice little bounce off its lows to potential resistance in that VWAP, point of control level convergence. Seeing a little bit of a build in volume here. Let's see if they can make that push. Pretty close. And someone asked me in the YouTube earlier, can we get to 49.50? Well, looks like the answer to that question is going to be yes. There we go. 49.50. This is where I take it off. I'm done. I don't want any more. Everything tells me that the market could go higher, but the risk and reward is no longer skewed in my favor. I trade based on probabilities, so I'm out. Doesn't mean I'm shorting it either. Just means I'm flat on SPOOs. A nice little setup there. Played out well. The extension of that upside momentum. We could visualize it through how options were trading and the movements in resting liquidity. The convergence of that provided some confidence to look at this bullishly. So that's exactly how we can play these types of setups. And this is why having Bookmap combined with the Traderade SPX options visualizer can be so valuable. All right, folks. Well, I have paid myself for my time today getting that trade in, booking those gains. I'm going to take a lunch break. I'll be back later, talk a little bit more about what's going on. But I hope this demo of the software I built is helpful, showing how it works, the value, and so forth. If anyone has any questions, reach out. Always happy to talk. I'll catch y'all soon.